I think Rainbow, I think, is the only hospital chain in India that I'm aware of, besides Sayhadri, but they're not public, who have cracked the hub and spoke model. I think that there is a real opportunity to create an on-ramp from the MBBS to the PG level without going through necessarily a medical college setup. Max is a machine, right? The kind of metrics that Max posts are crazy. Do I think it's good for society? I don't know. I don't think it's going to be good for society. But as a capitalist, you respect the hustle, right? For what they're churning out.
Hi, everyone. Welcome to the second episode of the Beyond Beta podcast presented by Navara Investments. And we will dive into the healthcare sector today with Gandharv Roy. Gandharv is a former CEO at Medica Hospitals, which was sold to Manipal Hospitals. And now he is setting up his own healthcare facility out of Kolkata by the name of Citadel Health. Welcome, Gandharv. It's glad to have you on the podcast.
Hi, it's great to be on.
I just want to put this disclaimer out that I think during this kind of discussion, we might talk about few listed companies and just in
Yes.
general about healthcare business. And it is just for educational purposes, and none of this is any kind of investment advice. Do you want to add anything about your background?
Yeah. So, I mean, I have a very vanilla background. I'm a good Indian boy. I did my engineering from 2008 to 2012. After that, I helped my father out, who was the chairman of Medica Hospitals. Meantime, I also got my MBA and basically saw the hospital through to its sale, um, beginning in 2023 to Manipal. So we exited that business, and obviously, since we only know how to do one thing, which is hospitals, we decided to sort of wait out our non-competes and jump back into the fray. So our new hospital, Citadel Health, should be commissioned in about 2026. So we're quite excited. We're quite excited to get that off the ground. And yeah, I'm sure we'll touch on all new things we're doing at Citadel through our conversation as well. And if nothing else, it'll give you a bit of an idea about how we're looking at healthcare, not just healthcare delivery as a market and as a landscape, and how that sort of informs our choices um, downstream, and what we plan on doing based on our viewpoints.
I think that puts you in a very interesting spot right now because I think uh, we are going to deep dive into the healthcare market and the
Yes,
segments and everything.
absolutely.
And I think with your experience, you've seen the ups and downs, and especially the COVID period and
Yeah,
the growth in the market after that. So I
massively.
think that gives you a great kind of experience and kind of perspective of the Indian healthcare system. So I think I just so let's start with the very basic idea of like
Mm-hmm.
the COVID period. We have all
Yeah.
gone through it. We have all seen what has happened, how the healthcare system kind of, if I may, like broke down during that the first or the second wave of the COVID. So, and I think we know the healthcare system in India as we go down into tier two, tier three cities, the facilities are more reliant on government hospitals and everything like that.
Yeah.
So, can you share your experience of what you have seen in that period and what changes has happened? Like, what changes has
Yeah.
the industry seen post that?
See, COVID was obviously a very interesting time because the patient loads were just enormous and immense and far more than what the system was capable of handling. And um, I think that, yes, India structurally at the moment has a lower bed per bed per capita than other countries. I think that incident is a bit more nuanced. First of all, it's not just about how many beds you have; it's about how many capable beds you have. And the second thing is, it's not just about how many beds you have; it's about how many people you have to man and occupy and work those beds. To answer your question a bit more about um, rural versus urban, I think urban areas, yes, obviously there are more corporate hospitals because and the argument will make is that there's a higher population density. But more than that, there's also more liquidity in the doctor market. So what I mean by that is a corporate hospital, anybody putting money behind a facility and is not a doctor, and of like by themselves is going to put money somewhere where they know that if my star doctor leaves, at least I know that there's other doctors available to sort of fill in the market. And that's actually one of the biggest challenges with going into tier 2 or tier 3 cities for a corporate hospital, which is a more structured setup. But I think the tier 2, tier 3 markets mostly suffer from a doctor supply issue, which then becomes your bottleneck for more facilities coming up. So COVID really highlighted that. They said, look, we actually don't have that many doctors in tier 2 and tier 3 markets. Everybody wants to be in a tier 1 market. So tier 1 markets relatively did better. I think very, very dependent on paying capacity, unfortunately, because even while there are a lot of government setups, the government tends to view its advancement or investment in healthcare through capex, not through opex. So you have all these beautiful palatial facilities with cutting edge equipment, but nobody to actually operate it. So I think those things really became very pronounced. And I think around that time, the government also, I don't know if it decided, but it definitely indicated that it wanted to move a bit more into a payer market than a provider market. So perhaps they started realizing that they weren't being able to deliver the kind of scale that they needed to. And they've actually really incentivized new asset creation. And we'll come into that as well when we talk a bit more about how the healthcare scene has evolved. But the government is really pushing, and we're seeing that right now, right? We're seeing like almost like 6,000 beds or something being announced. I think I'm understating that number. But from what I remember, it's like 6,000 new beds have been announced by all the big like major chains cumulatively. Right, so there's a huge capex build out throughout the country on the back of certain government incentives and initiatives.
Yeah. No, I think, and to touch on that point, I think it's not just about, like you said, it's not just the facilities, it's also about manpower. And I think that infrastructure part of just the supply demand side of things haven't looked great in India as well. So,
Mhm.
I mean, has that kind of situation improved or
On the facility side,
on the manpower side?
on the manpower side, okay, so just a couple of directional arrows, right? So
Yeah.
India has massively grown its MBBS base. However, the number of PGs, so postgraduates, has not increased as much. They've tried to incentivize corporate hospitals to run DNB programs, which is like a diploma national board. So it's basically a way for private hospitals to sort of bear the load to basically upskill our clinicians. However, at the same time, I spent a fair bit of my time on a lot of these message boards, which I feel is where the kids are talking. And you see a real despondency around the MBBS. Like people who are MBBS students, you see a real despondency because obviously, first you see a lot of violence against doctors, which has obviously really turned them off. I think you see tremendous wage stagnation. For example, in the government setups, the wages haven't really kept at par with inflation. So you have basically have a large growing MBBS base. Your funnel is still constrained at the PG level. So, and if you're more MBBSs you have, and your wages are stagnant, you have a simple supply demand issue, right? Your supply is growing, your demand, is sort of. I mean, the government actually sets the wage, right? Because if the government says, "Look, I'll pay you a lakh," the private sector may say, "Fine, I'll pay you a lakh 20." Right? But if the government sector says, "I'm going to pay you 30," the private sector may say, "Okay, I'll just pay you 50." I'm just giving you like 10
Yeah, I
indicative
understand.
examples. So I think that is really, I think, hurting the kind of talent we're bringing into healthcare as well. And I have my own thoughts on that about how that can be fixed. So I think that um, a couple of great things we can pick from other countries, and I'm probably going to get cancelled for saying this, but our healthcare delivery it's blue collar ish, where a lot of your earnings depend on how much time you can put in, right? And it's very high skilled blue collar work, right? Very technically complex. I think that there is a real opportunity to create an on ramp from the MBBS to the PG level without going through necessarily a medical college setup, right? So where let's say over 10 years, somebody who's an MBBS, maybe 10 years is a bit long, but I'm just giving you a rough example. Somebody over 10 years can go from being an MBBS to being an MD, right? Somebody finishes their MBBS when they're 25, 24, 25, right? They can be an MD when they're 35, but that completely changes their life like trajectory. Give them another 10 years, or they can be, by the time they're 45, they can be a gastroenterologist or a cardiologist, right? So there is an opportunity to create this on ramp. It's slow, but currently, I think what it feels like for a lot of the kids who are finishing their MBBS is that life ends at 28, right? Either you get into an MD program or you don't, and then life is obviously progressing simultaneously, right? It's not just about your work. You get married, you have kids, so on and so forth, and the other pressures. So there's obviously your parents are aging. There's a requirement to pay for the family's expenses and whatnot. So what's happening is that the kids are sort of stagnating at that 25, 28 kind of segment, and they're not getting the chance to upskill or move up. I think yes, you can have, like, for example, the way the army has like an officers program, so you can get them, and then you can really sort of, your trajectory changes. And if you have the credentials, you have the skill, and you can pass the exam, which I think should be really hard, right? Because we should keep our standards really high. And you can clear the exam. There's no reason for you not to be a qualified MD. So I think if you can do this, and you can do this for doctor MBBSs, you can do it for nurses, right? So nurses who, and you can create a similar on ramp, right? Like, give them the time to sort of get there, so that their lives don't end at 22. Because once you're a nurse, like, what do you do? Either you become you become a very senior nurse, like an ICU nurse or an OT nurse by the time you're 30 odd, or you get into nursing administration, right? But there should be an on ramp for nurses to also become doctors, because they do a lot of the on ground work. They have a lot of the implicit knowledge. They have amazing soft skills because they have to actually deal with patients. What we say is, like, in the hospital, 90% of the time is with the nurse, 10% is with the doctor, right? So they have a lot of the skills. They don't have a lot of some of the knowledge, but that doesn't mean they can't upskill and get to that level. So I think the reason I've brought up both these points is because the core issue of not having enough staff, right? If you can create a superior outcome for even, let's say, a mediocre MBBS student who over time can get to a certain level of education, you actually open the gates for more MBBS students to join. Because then they know that, okay, look, my life doesn't end here. Fine, I may stumble, I may fall, but I can actually get to a really good outcome in life. Similarly for nurses, if you can say that, look, you even if you're a nurse, that doesn't mean like you can't be a very highly skilled clinician. It takes time. It'll take time, but you'll get there. I think having that sort of superior outcome available will also help you pull really good talent into the system. And I think that will solve your tier 2, tier 3 issues. Once they go back to those hometowns, then they can keep skilling up and then filling those roles in.
They can serve
So I
their
think that
communities there.
absolutely. And they're probably best qualified to actually deal with their own communities. And, I feel like half of medicine is also just people skills. And just being able to talk to people, get to know them, embed yourself in the community, and so on and so forth.
No, I think that's a very good way of looking at it, because I think we need that kind of human capital. And I think as a country, I think in
Yeah.
terms of capital, there are a lot of players that can put in capital and build new facilities. But I think the actual then comes down to how many resources do we actually have.
Yeah. How are
So
you going to make it happen, right? Like, cash is
yeah,
cash. That's great. But how are you
yeah,
going to, like, convert cash into outcomes,
yeah,
right? For that, you need people. And the fact of the matter is that tier 2, tier 3 India, while it has tons of people, it doesn't necessarily have the people who can do the job. Yeah.
yeah.
So
I think
yeah.
that makes sense. But on the other side of things, I think, and I just, in preparation for this podcast, I pulled up some stats that I wanted to share, and just like have a question on that is that, according to some of the research available out there, India has around 14 beds per 10,000 people,
Yeah.
and which is kind of almost half the global average, and kind of almost one tenth of a country like Japan. So Japan has 129 to 130 beds per 10,000 people. So I think, and in the last couple of years, especially, I have seen a lot of major hospital chains announce, like you said, 6,000 beds approximately are being kind of worked on. So we are seeing this massive kind of capex cycle going on. Uh, in your experience, is this more still being focused towards the tier 1 and tier 2 cities, or are there any player trying to kind of go down chain into tier 3 cities, like you were talking about,
Yeah,
and yeah, and what does, just for our like knowledge purposes, what does that capex cycle look like? And I know you mentioned you are also kind of
yeah,
getting started on one, so
yeah,
uh,
yeah.
yeah.
So, okay, before I take that question, look, first of all, you have to, understand, and I'm sure you agree as well. There are two Indias, right? There's South India, there's North India. Very different demographics. South India has a much greater bed ratio, right? A superior bed ratio. Also has more medical colleges, has more doctors per capita, and then versus North India, which, like, for example, Bihar has like what 3 to 5 beds per 10,000 people. And Uttar Pradesh, I think they're adding medical colleges. It's not necessarily, the population is just, your denominator is just so large. How much ever you move the numerator, the ratio is not going to
The
move a whole
numbers
lot.
won't move. Yeah.
Yeah, and only grows faster. But I think that from what I'm seeing in the South, so let me start with South. Let me talk about both Indias. It might be useful to just talk about the metros as quasi South India, right?
Yeah.
Not to offend anyone, but just you know, demographic wise. I think in South India, you see hospitals much more spread out, right? So, for example, if you look at Narayana in the south, they have hospitals everywhere, like in all over Karnataka, right? Not just Bangalore, which is obviously their sort of stronghold. You see hospitals coming up in, let's say, Mysore, and I think there were like Belgaum, or there were hospitals sort of scattered all over the place. Similarly, with, let's say, a place like Kerala, right, where you have Aster has a significant presence, and like Kerala really feels like one large village, right? So in places like those, you actually have a really good doctor, like a bed to population ratio, and over there you do see like some level of tier two work. Some might even say even you see a decent amount of tier three work, and also connectivity is so good, it doesn't matter. People are happy to go back and forth. However, north of the Vindhyas, I think the only player who's really doing, I would say, tier three work. Tier two, yes, depends on what you classify as tier two, right? You call classify metropolitans as tier one, or are those tier zero? And then you have, like, for example, Calcutta used to be metropolitan. I don't know if it still is, but it's like a tier one, I guess. But for example, Ujala Cygnus is doing a lot of tier two, tier three work, right? I don't think they're a listed player, but they're doing a lot of tier two and tier three work. While obviously you have your players like Max and Fortis who are doing mainly tier one work, but now some of the expansion is moving towards tier two, or I want to say quasi tier two. Like, for example, I know there's a massive expansion coming out in like Manesar, right, which is basically an extension of Gurgaon, right? There's there's a lot of work happening in Punjab, but those also kind of tier one in terms of, it's really hard to classify, I think, by population or by earning capacity. But I don't see tremendous amount of work beyond the tier twos in India still, because I think the core issue, the manpower issue, is not yet solved, and obviously it's a population issue as well. And that's basically how I think the big players are sort of moving forward. Sorry, I feel like I only got like part of your question.
Yeah, no, I think the second part of my question was about just how do you see this capex cycle changing the landscape in India in terms of just the players? I think 27, 28. Do you see us being in a much better situation as a country?
Certainly, absolutely. I do think that it's going to make a difference. Now, how much of a difference it's going to make, I really can't comment on, because I feel like a lot of the capacity addition in quote unquote tier one markets. If you look at a lot of the listed players, uh, except for one or two of them, they mainly operate at like a 65% capacity. Now, if you were in any other industry and you told your board of directors, hey, I'm going to add new capex, but I'm only doing 65% capacity. They'd ask you to leave, right? Like, please turn in your resignation at close of business. But we're still doing that. So yes, it'll improve it. I think sometimes you're just possibly adding capacity to take share of market rather than grow market, especially if you're continuing to do it in the tier one and metropolitan markets. I think there's just exchange. There's just like a cash exchanging hands, pushing out smaller players. Yeah.
Is this growth cycle equally benefiting, say, a mid or to a small scale player as well? Or is this kind of restricted to not just listed name, but like big brands out there with, say, 1,000, 2,000, 3,000 kind of bed capacity? And
Yeah.
is there the scope? Is the industry consolidating, or do you think uh, like the smaller players have a niche to serve, like a niche market to serve?
Look, healthcare is a super local game, first of all. Right. Um, like let's take a like a really popular player, right? Let's say Yashoda Hospitals in Hyderabad. They rule the roost, so to speak, right? Their capacity and their reputation in Hyderabad is tremendous. I'm taking that example other than, let's say, AIG, because AIG has a national name in gastroenterology. But Yashoda is doing a great job in Hyderabad. But tomorrow, if they pick up and, let's say, move to, I don't know, like Amritsar, right? Nobody knows who they are.
Nobody knows.
They have no brand capital to really speak of in that area. And so it wouldn't really make sense for them to move there. So I think that what you're seeing is like the bigger players, yes, can they expand? Can they grow? And the bigger, like for example, players like Max, Fortis, they're still growing in their areas of influence. So they can grow because they have access to capital. They're public companies. They have reasonably strong balance sheets. Um, and they have access to capital, relatively inexpensive capital. Smaller players suffer because they don't have access to capital. It's very simple. And unfortunately, capital is the moat here. And capital allows certain players to expand faster. And then what happens is the smaller players get like eaten up. But to say that consolidation is the name of the game is not 100% accurate. There is certain levels of consolidation because I think what will happen is that small players will eventually just get tired, right? Like you're 10 years, you're running a hospital, chugging along, chugging along, chugging along. And then one fine day you just sell to private equity, you're just like, I'm exhausted, right? So private equity or one of the listed hospitals. So, but is there scope for uh, players to do much more? Absolutely. I think there is enough vectors of attack or vectors of opportunity rather in the market for a player like a mid-tier player to come in and actually create very deep moats. I feel like right now, bar one or two chains that I'm aware of at least, everybody else's moat is capital, and to some extent process and brand, but mainly capital. If you look at the big players come in, they basically come in, they throw a bunch of money, and you sign up to a 5 year non-compete. Unfortunately, you've lost 5 years of very productive time, right? Especially let's say if you're a 45, 50-year-old promoter, you're running a hospital for 10 years.
Yeah.
But right now, I think capital is the moat, or rather, capital is your vector of attack.
But you don't see, like, say, like a research facility or the treatment facility being the motive for some of the smaller players. It's very niche.
So,
And
I mean, if you look at, let's say, like an AIG, right? AIG 10
yeah,
years ago, they just about got massive capital investment. But if you think about Dr. I think his name is Dr. Rao or Dr. Reddy, I can't remember. I think it's Dr. Don't quote me. Like I think he'd been in the market since like 96 or something, or probably before that, right? He built so much time building his reputation out that he earned the opportunity to cash in that brand, and grow his facility. And now AIG is not just tremendously profitable, but also it's a name to be reckoned with in Hyderabad. So that it takes time, like because brand is the main thing if you want to work with. Brand takes time, and but there are business models that again we'll discuss, which we're trying to do. We're trying to put into place where we think that you can really start creating interesting business models to help you ramp up faster.
gives us a great segment to get into some of the business kind of details. And
Yeah.
just to start off with the very basic, like I know, and if some of the investors would know that, like
Hmm.
one of the key metric or few key metrics to look into for hospitals is occupancy rate and the average
Yeah.
revenue per bed and
Hmm.
EBITDA margins and few others. But is there anything else that I think as an insider you would kind of keep an eye out for in terms of how well your hospital is operating, and where can you help your staff as well as kind of for the betterment of the company?
Yeah. So look, things like occupancy rates, RPOBs, those are standard um, market numbers. I think the only thing that really matters, again, from an investing side, is your incremental return on capital. If you just chart out your companies sort of in normalized incremental return on capital over, let's say, 10 quarters, right? So that's 2.5 years. You can see where the company is going. Is this, and because like EBITDA doesn't matter. EBITDA is a trading multiple. it has nothing to do with that, what your business actually does, right? You could have great EBITDAs, or EBITDAs, for example, and be paying tons of money in rent. You could have a rubbish EBITDA because you know what? You've replaced your depreciation and interest with the rental cost. I mean, let's
Yeah,
keep
yeah,
it
I
real,
understand.
right? Like you look at EBIT, you look at incremental, or even PBT, or whatever you want to look at, right? Like look at incremental return on equity or return on capital employed. That's the only thing that really matters. I think RPOB doesn't matter that much because you know what? The doctor costs for a lot of these smaller facilities, they have great RPOBs, but the doctor is taking like 50% of the revenue, right? So you want to look at revenue per bed if you want to do that. For example, I think some of the best in class players do about 25 to 30 lakhs per bed EBITDA, if you want to use that number, right? I think that if you really want to get a view on how well you think a particular player is going to perform, you have to look at what they're planning on doing going forward. So, I'll sort of take this opportunity to really sort of call out the 3, 4 players that I think do a tremendous job in the market. And each of them for their own particular reasons. Mainly, I think, say, Rainbow, Narayana, Max, and Medanta for very different reasons. Medanta, because I think the kind of clinical work they are doing and able to represent, and these are public players. I don't know that much about the private guys because they don't share as much information. Medanta because of the clinical work. Max is because it's a machine, right? The kind of metrics that Max posts are crazy. Do I think it's good for society? I don't know. I don't think it's going to be good for society. But as a capitalist, you respect the hustle, right? For what they're churning out. I think Rainbow, I think is the only hospital chain in India that I'm aware of, besides Sahyadri, but they're not public, who have cracked the hub and spoke model. I remember, so when Medica was starting in like 2008, between 2008 and 2012, we kept going on and on and on about hub and spoke, hub and spoke, hub and spoke. You know what? It doesn't work, right? In the healthcare is a referral game, and we can come into what the model needs to look like later. But Rainbow is the only one that's cracked it. And they've done a damn good job of it because they have clearly defined what's the hub's job, what's the spoke's job, and they've created a business model where it actually feeds in and works. Which actually I think is the future of healthcare, but needs to be the execution is so hard, and the way you need to manage stakeholders is so you need to do so surgically and precisely. I think they deserve like a salute for how they've executed on that. And Narayana, I think Narayana is the only hospital chain that I really see that's doing the right thing. Like they're seeing where the puck is going, right? To take a hockey metaphor, um, they're really seeing where it's going and they're trying to get there. Do I agree with everything they do? No, but I think that it's great. It's great to see that. And the one thing that all 4 of these have in common is that they have practically a promoter ownership. I say, well, not majority, but like the promoter is in charge, quote unquote promoter is in charge. And that they're all taking a view saying that, look, this is what we're going to do. And they're executing on it. I feel like they're trying to derive alpha or sort of, higher returns from actually taking a perspective on the market rather than just financial engineering, which I see a lot of the existing players doing, right? There's a lot of financial engineering there, a lot of EBITDA maximization, which works for a 5-year timeline, 7-year timeline when you need to flip the asset, but doesn't necessarily work if you want to see this business as a going concern and you want it, and like you're not necessarily building it to last, usually building it to sell.
No, I have seen. I haven't dug deep into all of those, but
Hmm.
some of the points that you mentioned, I have seen, like with like say Narayana and all those Max, and yeah, you're right. The number Max post out is just incredible, and
Ridiculous,
I
right?
think yeah, and sometimes you question the valuation it gets, but then you look at the numbers that it continues to deliver,
Yeah.
and
No,
uh,
I think Max is like they're fantastic capital allocators, right? Like par excellence.
yeah,
Um, Fantastic capital allocators. They know what they're doing. Sorry, just to answer your question.
yeah,
I think insider ownership is super important. Obviously, as an investor, you also look at like price, right? What's your entry price? So maybe the other ones don't have an entry price, but I think seeing a perspective, right? Like what you really want to ask yourself as an investor in any of these businesses is that what are these guys' perspective on the market? And do I agree with this perspective or not? Do I think this perspective is valid? Right? Like so some people see Narana doing insurance and a lot of people say that look, these guys have no business getting into insurance. They've never done insurance in their lives, blah blah blah. Insurance is a completely different beast and so on and so forth. But whether you agree that A, can they learn in time, which I believe they can, whether they can deliver outsized returns. What's that going to look like? Have they communicated that to the market that, look, this is what the returns are going to look like? This is what my P&L is going to look like in, let's say, 5 years, because I can pull XYZ levers. And whether you agree with that. Do I think Max's business model will work in the future? I actually do agree. I do think it will for a while, because all societies are intrinsically tend to separate out. And so they will keep getting the cream of the crop because they have a brand, they keep performing, so on, and they keep doing great things with regard to that. Medanta, I think, will keep growing and creating like these flagship institutes in flagship centers in each of the cities they enter. And I think Narayana will keep doing. I mean, I agree with the insurance perspective. I think that it'll be a bumpy road for them, because with insurance you have one COVID and suddenly like you're flattened, right? So it depends on how they handle those tail risks. And I think with Rainbow, I think they're in a great business, right? It's mother and child, more child than mother. I like to say they're a children's hospital. It's a bit of a Trojan horse. They say they're a children's hospital, but they just do so much maternal, like obstetric work. I think they'll do well because that market is a pure cash and insurance market, right? Like there's almost no government payers there, so they'll always be able to sort of float on inflation. So yeah.
I think you highlighted one point that I had in mind. So I think I'll just
Yeah.
go in right now is about this business that you mentioned about Narayana, but in
Yeah.
general about insurance and the medical business. In terms of, I've read about Narayana, what they're trying to do and everything. And I think this insurance part of business makes sense to me. Obviously, the execution is a big risk. But yeah, what's your overall take on this, and how do you see this kind of aspect growing?
See, I think what Narayana is doing is it that will actually drive real consolidation. I'll explain why. The way I think of insurance is simply this, right? For a hospital to do insurance is basically the same as Amazon turning on Amazon Prime, right? If I really break it down into its component parts, right? I have a facility which is basically like a concrete box with equipment inside it. I have clinicians, and I have the ability to draw patients. Right. These are my three big pieces. I'm assuming doctors and facility are on par. That's like a thing. That's by itself. If you can dominate the ability to draw patients into your facility, then you're sorted. Everything else is done. It is basically revenue-based financing, right? You collect cash up front, and buildings can be financed with a 15-year financing. Easy. They're like warehouses, right? Like, I mean, they need to be nice and they have their own specifications. But buildings, like, it's not a complicated market. Clinicians are available, right? There are plenty of clinicians in the market, especially when the markets that Narayana, let's say, works in. Now, let's say if you go to, like a really small town in Madhya Pradesh, right? You probably won't have access to those level of clinicians, but trust me, you'll do just fine. Because think about it, right? So you live in, let's say, Gurgaon. What percentage of your time do you spend outside Gurgaon? You won't need to be covered in Gurgaon. And the fact of the matter, yeah, like, let's say if you pay 100 rupees as your premium, 1 rupee goes towards your outside Gurgaon coverage. If I think about it statistically, right? So, and also, sorry, just a fact of the matter, I was talking to somebody in the insurance industry. Basically, South and East India subsidize the rest of India's treatments. So both markets and Narayana's in, right? Yeah, basically 40% of your premium usually goes towards overheads and profits. But if you have access to the revenue and you decide that I'm going to pull the revenue, right, as an institution, and you make the efforts, you gain in two places. Okay. One is asset utilization. So the way you normally look at a hospital P&L is 20-20-40, which is 20% materials, 20% doctors, 40% fixed costs, 20% profit. 100%. Broad numbers, like, don't sue me.
Yeah.
If I own the patient and I operate my facility at 65% capacity, I can now operate my facility at 80% capacity, right? So that 40% will go down to, let's say, 35, 32%, 33%. Right? Say I save 7 percentage points there. It's dropping straight to bottom line. And if I'm an insurer, I get all my money upfront. So I can build facilities upfront because my P&L is only going to get hit, right? So then I can, let's say, I add my cost of financing. Now, what's my cost of equity financing? Because this is basically equity, right? Cost of equity financing is, let's say my ability to pull premiums is 1 year's revenue, let's say half year's revenue, right? Just to give you some rough numbers. If my cost of equity is let's say 18%, reasonable. Let's say 18%. That's 9% to my bottom line. Below EBITDA, like it comes into the interest if you think about it. It's an opportunity
Yeah, yeah.
cost. So I've added 9 plus 10. So I've taken my EBITDA effect, my profit, effectively from 20 to 39% through efficiency, asset utilization, and cost of capital. Right? So now for me to expand facilities is an overnight thing. I can pay better than anybody else. I can throw money at the problem, right, of expansion. And it allows me to really then use that leverage to not just be good at hospital running, right, which is actually a very limited form of healthcare. Actually start to eat more of the share of wallet, which then just allows me to actually become a healthcare network. This is rather than just a hospital company, which is a very silly place to be, because hospitals are where you go when everything else has failed normally, right? That's the purpose of the hospital,
Yeah.
right? Like it's the more a hospital is utilized, the more the society has failed at keeping its people healthy. So that's roughly how I think of insurance. And I think if you are in charge of the payers, then you can put in all forms of incentive structures um, to basically drive as much volume as you want towards your own facilities and affiliates and whatnot.
I think more than that, it kind of pushes for a brand loyalty. But my other question is, as soon as say someone is able to successfully execute, let's just say, take an example of Narayana. I'm guessing people like say Max, Apollo, Rainbow would be able to kind of copy that model. But what
It's a good
about,
question.
do you think the smaller players would be able to
Yeah.
pull that as well?
Actually, I think the smaller players, look, the players that are regionally concentrated will be able to do it, right? So let's say percentage of market share is your sort of metric, right? Um, let's say you're a small hospital in, I don't know, like Jhansi, right, where my Bua lives. One hospital there, if they run this, they're sorted. They own that market. Nobody can come in, right? If Max wants to come and build a facility there, they'll have to fight all those entrenched. Like they have no revenue. Like you already sort of
Yeah, yeah,
cornered the
yeah.
revenue in the market, right? What are you going to do? But if you're in Delhi, let's say you have to fight in Gurgaon, you'll have to fight with, let's say, Artemis, Paras, Max, Fortis, right? I don't know who else is there in Gurgaon. I think those are the big ones.
Vedant.
Um, Medanta, sorry, obviously Medanta. Then it'll come down to how many touch points you can have, right? That is how you start. The value of preventative healthcare is not that there are great margins in it. They're not, right? The value of preventative healthcare is that it is a quote unquote low margin / loss leader to lock in patients for long term. Let me give you an example, right? Let's start before you're even born. So let's say your mom has a health insurance, right? You are born in let's say, Narayana hospital, right? Let's say if Narayana does what they should be doing, which Rainbow does, which is that the moment you're born there, you're stuck there for 16 years. Like my son was born last year. I already spent a stupid amount of money on his healthcare, right? Just vaccines and
Yeah,
like ongoing health checks, right? Like I was probably like 20, 25,000, 30,000, something like that, some stupid
yeah,
number,
yeah.
right? And I probably will continue to do so until he turns 16, right? Or basically when he leaves the pediatric system. But in the meantime, I will go there, my wife will go there, my parents will go there, because my wife will then call the shots, right? Of like, listen, I'm comfortable in this place, we're going to go where I'm comfortable. And all of us are going to be like, Hanji, of course, let's go. Right. So they own that. Then let's say now I'm just going to do a fast forward to, let's say I'm 65, right? Obviously in that time, let's say I have my gallbladder removed, I develop diabetes, I have to keep going to the doctor, blah blah. Narana should be able to service all of those requests. And I'll also come back to like why the other players are not necessarily being able to do it, at least what I've seen. Let's say I'm 65, I have a house, my children are totally useless, they refuse to take care of me, right? They said, like, you're a khadus old man, like you go live by yourself. Narayana should come to me and say, hey, you have a house, right? You have a mutual fund, whatever, you have some holding. Let's say they should just come up to me and be like, look, here's an equity release scheme. We'll buy your house, we'll sell your house, right? We'll take like 1%. We'll take the rest of the money and put it into your healthcare, because after you're 65, let's say 50% of your costs go to your health. Like that's when you actually care about your healthcare. What do you need? You need a roof over your head. How much? You're not going to eat like, fancy food every day. That's not necessarily your vibe. Like you just want to live a decent life. You want to live a healthy life. You want to be engaged, and they should basically do, build some care homes and be like, here, old man, go live here. You've sold your house. You've underwritten your entire future, right? Just chill out, or just go chill out, right? That actually is a better way to look at healthcare, because you're actually looking at the entire spectrum and you're building products for each part. Now, let's rewind a bit before Narayana got into insurance, where I actually think is the right place to get in. Other players have tried to do this in the past in different ways. So let's start with Fortis. Fortis had SRL, they had Apollo Pharmacy / clinics. They were not able to execute it on it because I'm sure that organization went off the rails a little bit. So let's leave them aside. I think Apollo's tried to do it, but have you seen that old Microsoft meme of like, all the different departments pointing guns to each other?
Yeah.
It's exactly like that. I feel like they're not cohesive. Yes, they have like an integrated system and it's all under one company, but it doesn't feel like they're all rowing in the same direction. So until they have their Satya Nadella moment, I don't know if they're going to be able to all pull in one direction. I think Max is doing something interesting, which is around Max Labs and Max at Home. I think they're leveraging their brand to go into diagnostics, but diagnostics is a bit of a dirty business. It's a very cash business. Like you basically lose a lot of margins and just paying people off. And Max at Home basically helps them eat a lot of the post-discharge insurance revenue. Right, so after you get discharged, let's say you have a knee replacement. After you get discharged, you're going to spend another like 30,000-40,000 just on physiotherapy, X-rays, doctor consults, medicines, blah blah blah. All your insurance can pay. Your insurance can pay for all of that, but most people don't claim it. But Max can probably handle all of that as well for you. Every player is trying to do little bits and pieces in its own way. Sorry, one more problem. I think Apollo and like the old Max, not the current version of Max, but the old version of Max had Max Pupa, and you also had Manipal Signa, your Apollo Munich. I think the problem that you have and you end up having there is that you cannot actually leverage the strength of the insurance hospital offering, because you just get killed by transfer pricing. What I mean by that is that even if there's one share difference between the insurance company and the hospital company, you'll have to do an equivalent pricing. When you start doing equivalent pricing, you're dead. Right? So the same price Apollo Munich has to give to Apollo is the same price Apollo Munich has to give to, let's say, Max. The game's over. Right? You've lost before you begin. If you have under your own entity, which is what Narayan has done, you obviously run the risk of being wiped out by underwriting costs. So I think their ability to hedge, like I said, potential tail risk and keep themselves with their heads above water will become tremendously important. I don't know enough about insurance to really comment beyond that, but I think that they are currently best positioned. But I believe the insurance industry is also probably undergoing some changes where they're reducing the total upfront capital required to get in. And you're also seeing, let's say, Policy Bazaar trying to enter healthcare, and Bajaj, I think, is trying to enter healthcare. So it'll be interesting to see what they come up with.
I think it's an interesting proposition. And I think one point that you highlighted that I never crossed my mind was that the loyalty might be much higher in a tier 2, tier 3 city than, say, like a metro or a tier 1 city. So I think because there it's also about the relation you have. And if there is only one hospital, then you know the doctor, you know who you have to go to. And if he's prescribing something, you are bound to take it.
Yeah.
So
I think one metric that, I would actually love to see from listed hospitals, but none of them really show, is like 5-year retention, right? How many of my patients come back to me after 5 years? And if you want a number, like that will really highlight, forget RPOP, forget A-loss, forget this, forget occupancy, forget about any of that. Because all of that can be sorted. If your 5-year retention is beyond 10%, right, you are sorted.
Then you have that patient for life.
Then you have a patient for life.
Yeah.
But like how many, you don't necessarily see, you don't know, none of the players really share that number. I'd love to see that number for these guys.
Yeah.
Because what ends up happening is that, at least with, the metros, one of my friends had a procedure at Max because her gynecologist was based in Max. It's just like, okay, my doctor is there, so I go there. And the thing is that only I think the advantages the established hospitals have right now is that they are the currency is trust, right? That's why startups will always have a very tough time entering this market because they just don't invest in trust. Like Pristine invested, Pristine basically invested in their Google AdWords, right?
Yeah.
You're not building any sort of long-term loyalty. Doesn't matter how good service you give. That's a one-time thing. Like there is like I remember creating like when I was in operations, I remember creating this like stupid equation. Let me see if I can like remember it. It's basically like number of interactions multiplied by intensity of interaction multiplied by whether it was a positive or negative. So the summation of that multiplication. So sigma pi, number of interactions, intensity of interaction, quality of interaction.
Quality of interaction.
Yeah, because that will tell you, look, I repeatedly interact. I have net good interactions, and the big interactions or small interactions. Small interactions actually do much better in creating consistent quality. Um, and the problem with hospitals right now is that mainly healthcare or hospitals or the kind of patients hospitals see are in economics what you call one-turn games, right? So there's no way for me to know if this doctor is actually a good doctor. This hospital is a good hospital. If they seem good, if they talk well, I assume they're decent. Now, clinical outcomes aside, it's very hard to tell. Nobody's really recording those.
I think, and the metric that you're saying, a 5-year kind of retention, and especially if something like this succeed, then you can charge a premium as well to your customers, and obviously then it ensures you have that retention. And as a consumer, I know I'm staying for the next 5 years at least in Gurgaon, so I know that these are the hospitals around me. I don't want to drive, say, to any other city, and as long as a doctor is there, that
Yeah.
should work for me. So
And if
uh,
you're most Indians, most people like live and die like within 5 kilometer radius.
excellent. I know
Yeah.
we have kind of gone too deep into our
Yeah. A little.
conversation, but I just
Yeah.
had a few other kind of
Sure.
topics to cover about, say, the regulatory side of things.
Hmm.
So I know, like, obviously none of this is possible without say, on both sides, without government regulations and also the support of government. So like anything that you can share from the point of view of the government support that they are able to provide at this time, and kind of any regulations that is delaying some of the processes or something like that.
See, I think government. So I think the biggest issue with hospitals has always been around tax, where hospitals are charged GST for the services that they provide, but they don't get to charge their patients GST, nor should they, right? Like, because that is intrinsically inflationary for patients and for healthcare, which is a perfectly good way to like ruin society, right? And you don't necessarily want to do that. I think the government can definitely take a different view on the kind of GST that hospitals have to pay. Obviously, that has downstream implications. So I also understand why they aren't doing it. But there are different ways to like refund that through like taxes. But then that requires like a direct and indirect tax department sort of collaboration, which doesn't always happen. But I think the biggest issue that hospitals are going to face, which is what I kind of came to for Max and it's whether it's good for society or not as a whole, is that with healthcare premiums growing at like 15 to 20%, which they have been doing, especially post COVID, because people want to recoup losses. Um, these insurance companies are spending close to 35 to 40% on just overheads, uh, and the commissions and stuff. So there's a fair amount of fat sitting in that system. Um, I don't think government intervention on that is the right way to necessarily go about it. It's really tricky. Even though I'm very tempted to say that, okay, maybe Ayushman Bharat should be more for a voucher system rather than as a payer, because what happens is that then people can't access really good healthcare, right? Because let's say somebody can only has an Ayushman Bharat card, and let's say cancer treatment is expensive, cancer surgeries are expensive. They are because the people who do it are extremely trained. They spend like 15 years, 20 years training for those. The equipment's not cheap. It could be made cheaper if it like we're given like GST benefits or customs or import duty benefits. But I think fundamentally what the government needs to do is just get better in keeping the population healthy. There's a study that I remember reading, and I forgot So the American numbers were in USD, and I tried to convert it into like India just for PPP. For example, the healthcare costs for somebody who has, let's say, diabetes, right, or one or more comorbidities over their lifetime, assuming they live their full life, and they don't die prematurely, or they continue to access healthcare as they should, can be close to, 70 to 80 lakhs over their lifetime. Now a lot of that doesn't necessarily happen because people's lives don't necessarily last as long as they should because they don't have access to healthcare, and healthcare is so expensive. But for a healthy person, it's close to 15 lakhs or 20 lakhs. So there's a almost order of magnitude difference in what your life expense looks like, and what your healthcare costs look like. If the government really wants to get involved, I think that they're already doing tremendous job for people, for lower income members of society. And it literally just comes down to simple things like follow up with people. Is the government following up, seeing if people are getting their vaccines? Are they getting, are they like getting their blood sugar done routinely? Everything that, insurance companies are trying to do, the government should be doing. But the problem is that if you think about it very crudely, let's say people live, till 80. Again, that's not the average age of our population, but let's say I'm just taking 80. Once you're past 20, you've nearly lost the ability to change behavior and certain entrenched patterns for the majority of people, which means that, and people's healthcare costs only really come in the last few years of their lives. It means you're stuck with like everybody who's between, let's say, 21 and 80 right now. So you will be better off later, but you're not better off right now. But you need to start. Like you need to start sooner rather than later, because what that'll do is it won't really hurt the industry that much. But what it'll do is it'll really reduce healthcare costs going forward, which will then basically make the population healthier and give Indians more, income or disposable income, so to speak. Not easy to see, but I think that one way I think healthcare costs can be dropped is certainly if the government makes it easier to get an insurance license. There's no one solution, but I think that if the government really wants to get involved, start hiring people, paying people well, increase your supply, get doctors in, get nurses in. I think give them a better sort of guide path to what their lives can be, get better talent in, monitor people over a period of time. They'll just save so much money, right? It won't show up. Nobody will get any like kudos for it, right? But nobody's going to get any awards for it. Right? Like, oh, you prevented this from happening.
And just one last point to touch on
Hmm.
is about the digital kind of push
Hmm.
in this field. So
Hmm.
telemedicine and
Yeah.
telehealth and all. Do you see
Hmm.
that kind of change really making an impact, or do you think this will uh, this will fade off at some point?
Here's the thing. I think that unless the problem with the way it's currently structured is is not in the business model. It's in the cap table. If you're funded by somebody who has a 5-year tenure and needs to exit your business, they're going to say, we're growing this fast, grow this fast. We're going this fast, grow this fast. We're going this fast, grow this fast. And you end up spending much more time on things that don't actually create trust. Look at value. Value is like a very arbitrary, concept. Can you create trust? Can you actually service one person for 5 years? I think the reason typical digital healthcare has failed by and large is mainly because a lot of the solo players are not necessarily motivated or have the right motivations on their cap table. I think the biggest value that can be driven here are by the existing players. So it's very simple, right? If you do insurance, right? So this is actually, I'm just going to sort of talk my book here. That's what we're doing, right? We've done some trials, but basically we're doing an insurance distribution. We're not insurers, right? Because we see the underwriting as a commodity business, which it kind of is. But we say that, look, I get whatever margin I get from selling insurance. I'm just going to take that and put that into preventive care. So I have my cohort of, let's say, 100,000, 10,000 people. I say, listen, I'm going to give each of you a doctor who will connect with you once a month. He'll just talk to you about your family how you're doing. If you want to kick any habits, let's say you're smoking, how can we get you off smoking? Let's say you want to lose weight. I'll link a doctor and nutritionist on a per hour basis, right? I'm actually ending up paying that doctor approximately, I think is about like 200 rupees per hour. If I think of it very crudely,
Yeah.
right? If I think of it very crudely, it's about 200 rupees per hour. Uh, that doctor, I'm seeing, let's say, three, four patients an hour, right? Because a lot of the patients I just follow up. It's like, oh, how are you doing? You're doing okay, okay, bye, right? But I'm actually keeping my population healthy, and that is driving tremendous trust to the system. So patients are happier because look, this is a high touch system. Sometimes they'll also say, no, I don't need a follow up. But they know that they have the option to say that I don't need a follow up rather than actively saying that, hey, call me, I'm having a problem. They know somebody's checking in. Right? Are you okay? 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 So, and we don't want to automate it. Like, it's better to systemize that than to automate it. Because automating becomes impersonal, which loses trust. Systemizing means that a human comes and calls you and says, on a cadence, will call and say that, hey, are you doing okay? I just want to check in. Are you fine? Okay, you don't want to do the meeting? Great, let's do it next time. And some of our patients are having good outcomes, right? So one of our patients has lost like 2 kgs or something in like 6 weeks, right, which is one of the goals that she had. One of our patients was having some neck pain that was just kind of niggling for a long time, and she didn't really talk to anybody about it because it's like, you just have like pain, and it turns out there was like a small microfracture there from something that happened from some chemo that she got in a very long time ago. But so these small things, like I said, it's that sigma pi, right? Like if you it's doing like a scientific notation. It's like number of interactions, quality of interactions, impact. Impact is low, volume is high, quality is always great. So that's just how you build trust.
As long as
And
the
I think
trust factor stays, I think this could work. But I think it's not a short term
it's
kind of
not, and it
project.
shouldn't be
Yeah.
like yeah, it's not a. I think what happens with a lot of M&A in healthcare is that look, if somebody's going to pay top dollar for an asset, they need to get that money out. The first thing that gets hit is costs. Unfortunately, there's a tremendous amount of cost, and I know it's hard to tell. Right? Marketing is a probabilistic game. You don't know which of your costs are adding value, which ones are not adding value. But the finance directors are very deterministic, right? They're like, this number, nikalo. This number, nikalo. So what happens is that quality starts dropping in the hospital. Patients are unhappy. By every metric, they may be doing fine, right? Like throughput is better, volumes are better. So they think, okay, it's the system is doing all right. But healthcare is also very much like a diesel engine, right? Like the work that we did over 10 years will ensure at least the next 5 years. But the work that's going to happen over 5 years may not ensure 5 years after that, right? Like it takes time to ramp up. It takes time to basically fail slowly if that's something that happens. Um, so yeah, you have to take a very long-term view, and EBITDA is not the right way to do it, right? Like, especially if you're looking at retention of patients for long term, really keeping people within the system, you have to spend money on like it might be like very small losses or even like a zero margin activity, right? It's like, I mean, if you look at a P&L, it might be like 0.202% of your revenues. But you know what that's doing? That's keeping people in. It's
People
a
in.
feel good thing that's building brand. Now I can't capitalize that on my balance sheet, right? Because my accountants won't let me. But the fact is, it is. Um, and so really being able to say that, look, do this, don't do this, is I think that the private equitization of healthcare will lead to. I think I heard them on the Ken podcast. This term, it's called the enshittification. So things will, a lot of hospitals will get pretty rubbish until the market reacts to it. And I think that a lot of players should see that as an opportunity, like local players, owned by more patient capital, should not be dismayed at seeing a lot of M&A happen in their own vicinity. I think it's very much an opportunity.
I think that's the point goes back to the same thing you mentioned earlier is uh, being a promoter led might be in a better position to kind of
Yeah,
uh, work on something like this. And especially
yeah, yeah.
if you are going with that mindset, you have a longer term view than like a private equity coming in and doing something like that.
For example, early stage healthcare delivery, very hard to get funded. Like you'll get absolutely murdered on valuation and terms, right? As a new promoter, we know we're trying to raise trying to raise money, It's pretty rubbish. But patient capital is the way to go. It's the way to go. So if you're experienced, you can get really good. You can get good terms, and obviously you give those. You have to bear certain risks. You give those investors the right returns. But I think one of the blessings that's come to the Indian market is actually the SME IPO. I mean, yes, I know it's been abused by a lot of less than scrupulous players. Um, but I think that it can give a lot of smaller businesses that are doing decently enough. For example, I went to Faridabad the other day. I saw this group of this hospital, right? Five doctors, five, six doctors got together, built it up. Beautiful hospital, returning decent numbers, right? They obviously need a little help, which I'm sure they'll get. Like it's a learning process. They should just go SME. They should just drop their SME IPO, right? Get enough money and expand their facility as long as they do it in a capital efficient manner. And because things tend to lag, the biggest temptation is always, we'll build it and 5 years we'll sell it to Fortis or Max or whoever. But they're in a unique position to actually just go public and then live their lives. You kabhi bhi bech sakte ho. You can sell anytime. Why sell now? Like, and these doctors are like, I wouldn't say young, but like in doctor age, they're like middle age for doctors, right? They're like 50. For like doctors and for clinicians and surgeons, that's very much middle age, especially with robotics coming in now, which allows older doctors to actually keep their medical practice alive for longer.
That note, we saw Warren Buffett
It is
announce
retire.
his retirement.
Yeah,
So
yeah,
yeah,
yeah.
I think he's 94.
I feel
I
like he's
mean,
every investor's like grandfather.
yeah, I mean, it's just, I think he's shared a lot of wisdom over the
Yeah, yeah,
years. And I
yeah,
think
yeah,
it's been similar to what I think some of the people I follow. It's just like, it's been an open book. But at the end of
yeah.
the day, your winners need to kind of just overshadow
Shine.
some of your
Yeah, yeah, yeah.
losses. And I didn't listen to the whole thing just yet. But
Hmm.
I think I think he mentioned something like Tim Cook has made Berkshire Hathaway shareholders more money than I ever did. So
Yeah,
I think he was just
yeah.
thanking him for what he has done for Berkshire shareholders. So
I think, and this was more Vinod Khosla and obviously some Munger, is that like us, like only success matters, right? You can have one success and have 1,000 failures, but as long as your downside is not terminal,
yeah,
you can just keep chugging along. You can keep batting. Yeah. And I think that's something that healthcare really needs. Like people are, I think because so much healthcare is not promoter run, employees will only work to keep their jobs and they will not tolerate any failure. They're better off not taking any risks. They will not take risks. They'll be like, हाँ छोड़ दो, किसको करना है यार, मुझे नहीं करना है. It's not really going to add much to my bottom line. It's not going to add much to my incentive. Only promoters will go to bat. And so the future of healthcare is literally up to us to decide. It's not up to the government to decide. If we don't create a more sustainable healthcare system that offers returns to shareholders, right? It should offer. Like for example, healthcare is a low beta business.
yeah,
If you
yeah,
look at the returns, it's a low beta business. It is akin to a utility, unregulated utility. Fine,
yeah,
so it
yeah.
gives you a bit
Obviously,
more. Like fine, like it's an unregulated utility. It can actually bear much more debt than it currently does, right? Like currently, I mean, most of the healthcare guys don't actually have that much. Like maybe they're, I mean, if you look at book value, they may have like maybe the listed guys. I know Rainbow doesn't have any debt at all. It can probably bear more debt. Um, Fundamentally, what I'm saying is that healthcare should be valued as a unregulated utility, right? And you don't have to. If you keep, you don't have to chase like tech returns through your company. I mean, yes, you can, but if what will end up happening is if we don't regulate ourselves, we will be regulated, and that'll actually hurt the industry far more.
I think, and this is I'm kind of including my personal opinion here. Especially, I'm talking about the Indian healthcare system needs trust.
People are scared. See, people are scared that if I say something, you know, this crowd will come and like beat me up,
Yeah, yeah,
right? Um, but what we have in our experience, like if you just communicate to patients, and you can have terrible outcomes, right? Because we are in the business of bad outcomes as well. As in, like for example, when I ran Medica had about I think 120, 130 ICU beds, a lot of ICU beds. Right, we were known for our ICUs. And so obviously we had a lot of deaths because we had a lot of ICUs. And one of the investors was like, why do you guys have so many deaths? Like, this is unnaturally high. Like, because we're a ICU hospital. But
See
the reason we
hospital.
don't have problems is because we counsel patients day in and day out. We have a team whose job is just to go and talk to patients 3 times a day. When they come in the mornings to see the patient, the patient relatives. We talk to them. They come in the evening, we talk to them. Talk. We have doctors, certain junior doctors whose job is just to keep updating patients because it just smoothens your flow. And remember what I said: number of interactions, quality of interaction, outcome, intensity. ICU interactions are always intense interactions, and majority of them are very positive. And what that actually did for Medica is that it built Medica's reputation. It built Medica's reputation as an ICU hospital, and probably it had the strongest ICU in Calcutta, I would say Eastern Asia, India, not Asia. Let me not get ahead of
Yeah,
myself.
Indian East India. Yeah, no.
Yeah. But it was just that. Again, plugging. My brother was running the ICU, so he did a really good job. But especially during COVID, we had like a little like call center, like an update call center. It was just calling and updating. Okay, this is what your patient had. This is how much oxygen they got. This is what the doctor's thinking. And if there's a change on that, update it. This is what the doctor's thinking. Now, okay, it may take a couple of days longer, or it's taking a couple of days less time. It's just that it is a 3 minute conversation. You can do 20 of them in an hour. A lot of the work we did then, now that we've exited, has made it easier for us to raise money because people are like, oh yeah, we know what an amazing job we did in Medica. And with family offices, for them, it's not just, obviously returns have to be there. And, we are sort of backstopping those return promises as well that we have to make, right? But I think that there is an undercurrent in this country where people with money do want to invest in institutions that are not just going to bleed people dry. Like they want to invest in institutions that are creating institutions, like facilities that are institutions, rather than facilities that are hospitals. And it's made our fundraise this time much easier. And thankfully, we've also been able to maintain mostly majority this time. So
Yeah. No, I think I would say look after the patient more than the investors. I think the investors would come automatically in that kind of a
you
scenario because
automatically look at
yeah,
investors once you take care of patients. More time, but you know what? Like
yeah,
DCF, right? Discounted cash flows to present value.
correct. Yeah,
I just live for longer. I have
yeah,
greater
yeah.
longevity. I have greater longevity. Yes, I have slightly higher upfront cost, but that's how utilities work. You pay once and then you just reap for centuries.
No, I think that was a great discussion. But any
Absolutely.
closing thoughts you might have, or anything that we might have missed from your point of view? And I think I am going away from this conversation with a lot better insights
No,
about.
I think that the two big takeaways which I've sort of been hammering on over and over again is um, one, you have to remember healthcare is the currency is trust in healthcare, right? Trust takes time, and don't forget my formula. Just talk to people as much as possible. It's just communication. You just have a large number of interactions, and they're positive, and hopefully positive interactions. But if they're net positive, you're going to have a great
Yes,
time.
shut up. Hi.
And please, and I would like to see more of the country take a promoter mindset. It's about thinking in the infinite, right? Like what is good for this industry, what is good for people on the whole. Um, and I mean, ideally, you'll get paid money for that. See, I want to see on ramps. I
Yeah,
really want to see on ramps, just simply because, like, life can't end at 25 or 28, right? So, example, when we ran Medica, we had RMOs, right? So, registered medical officers whose jobs were basically just monitor the patients who are in the wards. And some of these guys are incredible, right? Incredible. Like my nurse would rather call that doctor rather than call like a senior consultant in internal medicine sometimes because that guy knows what's happening and will sort things out on the
sorted.
spot. But because he missed the boat when he was 25, 26, wasn't able to get into a PG program, in a way, his life kind of, I wouldn't say ended, but it just kind of stagnated.
Yeah,
And then, and then, and I think that once your future is set, you lose hope for what could have been, right? But if that person had the chance to keep progressing, there's no reason he can't, as a pilot does, train and do hours. But have the courage to do it, do that, and do it with nurses, do it with doctors. You'll have a workforce that is extremely well trained. Um, and yeah, I think that's the place to go.
I just want to thank you for your time.
I enjoyed it. I feel I've been
Yeah,
holding on to all this stuff for like years. It's like I want to tell somebody. And when you messaged me saying that you want to have a
yeah.
chat around this, I was like, okay, let me just sort of vomit it all out.
But yeah, thank you. Thanks for being on the podcast
Thanks,
and thanks for
thanks,
sharing
Nitish.
your
Thanks for having me.
opinions and thoughts.
Yeah. So